I'm your host, Daryl Thomas, and today we're going to cover gold. I hope that you all are doing well. It's been a little while since I've been live on the show, but I'm always happy to be back. Going to be uploading a lot more here in the near future. So I appreciate you all rocking with me, all 6,000 of subscribers. And then I'm also streaming from Facebook. So I hope that you all are tapping in on Facebook to hear what I got to say, because I believe what I got to say is important. And I think a lot of people believe that as well. So I hope that you all get some value from what I have to say today. So we're going to dive into multiple reasons why gold is outperforming, and it's performing significantly well. And so I want to start with just showing you all what I've been up to. Okay. So the first thing that I've been up to is that I've been uploading a lot of content on, I'm going to share screen with you all. This is the channel that I've been working with, VRIC Media, which is the Vancouver Resource Investment Conference. And so many of you may know who Jay Martin is, and that's who I work with. I work with Jay Martin. So a lot of my uploads are here, where I've been interviewing multiple guests. I do typically post this over on the Money Level Show. I try to do it consistently. I know there's been quite a few times where I haven't, but we're uploading here very consistently. So as you can see, recently interviewed Danielle DiMartino Booth, Josh Young, where we covered oil and such. That was about 2 days ago. Interviewed Michael Oliver, where we talked about gold and silver and its performance. And so this is where I've been uploading a lot. This is where I've been at. And so, yeah, I hope that you all go subscribe here as well. But I am going to continue putting out content on the Money Level Show. I just wanted to share this with you all so that you all know that I have been working. I just haven't been working as much on the Money Level Show, even though I do have a couple of interviews coming up with some of your favorite guests. So just want to share that to start off. All right. So first, we're going to talk about the drivers for gold. Why is gold outperforming? Why is it doing significantly well this year? I mean, there's many tailwinds for gold that we're going to jump into, and then we're also going to talk about the outlook moving forward. As right now, it is up at about $3,700 an ounce. This is measured in dollars, and so what we're going to do is actually look at the chart for gold to get us started off. So when we look at the chart for gold, let me go ahead and share that with you all. Gold is here at about 3705, 3706. It's been actually trying to break above 3705 and 3700. It's kind of reached some resistance here. We're looking at the weekly right now. Let me go ahead and change it over to the daily chart really quick. And what we're going to do is look at the daily, and the daily is going to show us just kind of like it's been struggling to get above this range here. But it's closed above 3,700 a couple of times. It's also closed below it. We had the Fed come out, cut rates. Gold fell down a little bit, fell down to about 3670, 3680, bounced back up above 3,700. So it is reaching a little bit of resistance. But I mean, when you look at the bigger picture, it's just been on a tear. So as you can see, gold is just, I mean, since 2023, I always recall this moment here in October of actually 2022. Actually, it was October, not October 2022. It was October of 2023. It was over here around this time. I remember I had went to Rick Rule's conference, and you all know that Rick is very bullish on gold. And I went there, and there was a lot of talk about gold, but also there was a lot of fear of recession. And I remember we had this big drop here in gold where it went down to about 1,800 an ounce. I actually bought some here. I felt like I didn't buy enough. But ever since then, it just kept roaring, just roaring, and now it's at 3,700. So, yeah, so I remember that vividly when gold had fell significantly during that time. And so yeah, it's broken out, and now we're kind of just in these uncharted territories. I could put a Fibonacci on it, but most project that gold is going to hit 4,100. There's multiple different projections that we can get into, and so that's the chart for gold. So why is gold going higher? Obviously, gold is real money. It's been money for thousands of years. Many of us have gotten conditioned to these paper dollars that just lose value. As you can see, the dollars losing value. Um, Multiple, like the dollars that it would cost you to buy goods and services at a certain point in your lifetime, depending on how old you are. It takes a lot more of those dollars to buy it. So the dollars losing value. It costs more to buy a home. It costs more to buy groceries. It costs more to buy a car. All those different things, and it costs more to buy gold. So when we look at gold, gold is actually the dollar's falling against gold. So this is just a reflection of the dollar losing value against real assets. And so that is one of the reasons why gold is typically going higher in price, but in reality, it's the dollar falling against gold. And so let's go ahead and look at a couple of charts I want to um, dive into because I think these are important factors for gold. Okay, so let's go ahead and start with this tweet, or I don't know what they call it for X. I don't know if it's a tweet or what. I guess it's an X post. Maybe that's what we call it. But let's go ahead and start there. Okay, so this is the first one. All right, so as we can see, um, Tracy Shoe Chart, very well known on X, posts a lot about commodities, but posted this chart according to the World Gold Council, which you all know that I've interviewed Joe Cavatoni from the World Gold Council multiple times. And this shows the largest increases and decreases of gold holdings in Q2 of 2025. Okay, so as we can see, Poland has increased their gold holdings by 18.66 tons, Kazakhstan 15.65 tons, Turkey 10.83 tons, China 6.22 tons, and Czech Republic 5.73 tons. Now, there's much speculation on this, but typically, why are central banks around the world buying gold? A lot of it has to do to the weaponization of the dollar. When Russia invaded Ukraine, there are folks that believe that uh, the West or the U.S. shouldn't be policing other nations, and the dollar is supposed to be a neutral reserve asset. It's supposed to be that neutral reserve currency that any country can use, regardless of their politics or policies. However, when that was weaponized against Russia, and there was many sanctions, like Russia was kicked off the SWIFT system and all of that, and I'm not getting into their reasons for invading Ukraine or whatnot, but I think that there's innocent people that are impacted by these conflicts amongst these two nations. And so many countries are buying gold because they're like, okay, well, what if the US does not like any policy that we do or any conflict we get into? Could they just take us off the dollar system to where we can't use it? And so that is one of the main reasons why central banks are buying gold, because gold's a neutral reserve asset. The dollar is supposed to be that. But when it was weaponized, many central banks were like, no, we're going to start stacking gold and trading outside of the US dollar system. So as far as decreases, you got Singapore, they sold 10.96 tons, Uzbekistan, 3.11 tons, um, Germany said Germany 1.03 tons, and then this is just very insignificant. So these are Q2 of 2025. These are the data that came out from the World Gold Council. So there was a huge amount of increases, not as much decreases. So this is a big driver for gold. Okay, so now we're going to look at another post. This post was reposted by Tevi Costa, who I follow and does a lot of charts and stuff. But this chart here has been making waves on social media, and this talks about foreign central banks hold more gold than treasuries. Okay, so U.S. treasuries are debt, which pretty much finance our government spending. So countries would buy U.S. Treasuries to uh, to get a yield on their money. So the U.S. has to pay this debt back with interest, and that was the reserve asset. That's what countries would hold their wealth in, was U.S. Treasuries, and those Treasuries would either be bonds, 30-year bonds, 10-year bonds, 20-year bonds, paying 3-4% or whatnot, and so now, since 1996, U.S. Well, foreign countries hold more gold than U.S. Treasuries. So that's a big shift in the landscape here. So as you can see here, back in the 80s, you had 70s, you had a lot of inflation, so more countries were buying more gold, but then the U.S. allowed interest rates to go up to about 20%. So many of the U.S. bonds were paying, 18, 19% yields on the 30 years. So you could just park your capital in a 30-year bond at 18% interest. So as you begin to see the decreases in the gold tons for the central banks were decreasing for a while, for over that period of time, and the treasuries were increasing. And so treasuries are increasing over time, and then US gold was down. Now, as you can see, this year, gold as a holdings as a percentage of foreign reserves is higher than US treasuries. So foreigners are not holding U.S. treasuries. I mean, the U.S. Credit rating has declined significantly as well. We have a lot of debt, a lot of deficits and such, which we're actually going to go look at that here at these abysmal numbers. So when we look at these abysmal numbers, we have 37.5 trillion in debt. I believe when Trump got in office, it was at 36 and some change. So we're almost at a trillion in debt. You do have here Doge clock, which is at 641 billion. There's a lot of disagreements with this number, because Doge did fabricate some numbers. They canceled some contracts, contracts that were supposed to pay contractors maybe 10 years down the line, things of that nature. And they counted that towards the savings. But this wasn't, those dollars were not realized yet. So if you were a contractor and you had a contract with the federal government to start a project in 5 years, and let's say that contract was for $20 billion or something of that nature, right? And let's say Doge came in and canceled that contract. Okay, even though the government didn't pay that $20 billion yet, Doge still counted that as savings for the American people. Okay, we saved the government from paying out this contract. And so those numbers are pretty inflated. But I mean, there's a lot of arguments against these numbers, saying that Doge was actually a failure in a lot of ways. And so yeah, so there's a lot of speculation and discrepancies in how they're calculating those numbers, but this is what it says here. Okay. Um, as you can see, our budget deficit at 1.9 trillion, almost $2 trillion. We had the big beautiful bill pass, and the big beautiful bill, you had multiple different agencies come out, like the Congressional Budget Office, as well as um, the Committee for a Responsible Federal Budget. Um, they came out and said that the deficits are going to increase significantly. Now, this does not include tariff income or anything like that, and the tariff income could actually be significant over the years. Let's say if they are continued, right? I think we're bringing in a lot more revenue from the tariffs than we have in prior administrations. However, that revenue is not going to tackle much of this, and then that revenue can also be spent on something else. It could be irresponsibly spent. So this is another reason why gold is going higher. So this just shows that the deficits and the debt is going to continue to increase. We have a lot of off balance sheet liabilities, as you can see down here. Let's find it. Where's off balance sheet? So the off balance sheet assets. Da, 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 da. Let's find it. Where's it at? It used to be somewhere on here, and I cannot find it right now. I think they may have changed it a little bit, changed the site around a little bit. So, anyways, off balance sheet liabilities are the promises of Social Security, the promises of Medicare, which is um, over $100 trillion. So yeah, so this is would be classified under here, unfunded debt and interest. So that means that it hasn't been funded yet. So there's a lot of things that are driving gold. I mean, and this just shows that more dollars are going to be printed, as well as the dollar is going to lose a lot more value over time. And so those are some of the main reasons why gold are moving. Um, let's see what the chat has to say. We got multiple people on the chat. JT said the sound is good. Thanks, JT. Trying out this new microphone right now. You also glad to have you here with me today. I'm glad it sounded good. My guy Rob Knight, him and I went to high school together. What's up, my guy? Good to see you. Good to see you. He says that definitely needed with how things are going on in Ukraine and Europe. Um, he says the countries in the area, their currency is changing rapidly. Yes, indeed, and especially since Belarus and Poland have heightened tensions because of Russia. Yeah, so definitely all factors. I don't know if you study much about the BRICS nations and just kind of some of the things they're up to, but they are trying to they are moving in a way where they can trade without the involvement of the U.S. government. So those are some of the things that I've been looking out. All right, so now let's get to where do we think gold is going? Okay, all right, so I think gold is going significantly higher. Here are some points that I want to make. Okay, so this was a recent short article by at Seeking Alpha, and they said BlackRock, one of the biggest hedge funds in the world, favors gold, Bitcoin growth, and international stocks after Fed rate cut. Okay, so here you have one of the biggest hedge funds speaking about gold, which we haven't even seen a lot of that since the last gold bull market. Um, and so now you have a big hedge fund speaking on gold. So this is one reason why I'm bullish, right? You have big money saying, okay, these are some of the assets that you want to hold. All right. Now let's look at another one. Okay, so Morgan Stanley. Morgan Stanley, CIO, this is Chief Investment Officer, favors 60-20-20 portfolio strategy with gold as inflation hedge. So typically in your retirement account or whatnot, it would be a 60-40 portfolio where it would be 60% stocks, 40% bonds. Um, bonds are not performing well at all. In bonds were actually the hedge whenever there was a market crash. Many investment managers would park your money into bonds because they were the safe haven. They are no longer seen as the safe haven. Many bonds have lost a lot of value. So to see this change from taking 20% from bonds and actually adding it to gold is pretty interesting. I mean, and this is the chief investment officer of Morgan Stanley, which is a huge wealth management company. So when we look at this, a 60-20-20 portfolio strategy that includes 20% gold is more resilient inflation hedge at a time when U.S. equities are offering historically low upside over treasuries. Okay. And investors are demanding higher yields for longer term bonds. Morgan Stanley Chief Investment Officer Mike Wilson said on Tuesday. A 60-40 portfolio, which typically has 60% of its holdings in stocks and the 40% in fixed income, which these are like treasuries and bonds, counts on moves in the two asset classes to offset one another, with stocks strengthening amid economic optimism and bonds rising during turbulent times. Wilson, however, favors a 60% allocation to equities, a 20% each to fixed income and gold. With bond markets, the prominent Wall Street bear prefers shorter duration treasuries of 5 years over the 10-year notes to capture rolling returns along the yield curve. So he's saying don't get into the he's not favoring the 30 years and such. He's favoring shorter term treasuries. He says gold is now the anti-fragile asset to own rather than treasuries. High quality equities and gold are the best hedges. The strength of a dual hedge lies in the contrast in the contrast. Both hedge inflation, both equities are growth linked, risk on bets, while gold rallies as a safe haven when real rates fall in downturns. Okay, so real rates fall in downturns when the Federal Reserve reduces interest rates, and those interest rates are lower than the inflation rate. So if you were to buy a U.S. Treasury and let's say interest rates are at 2%, you're getting 2%, and let's say inflation is staying sticky at 3%, you're losing 1% um, on your wealth. That's how much. That's the real rate. You're getting a 2%, um, and the inflation rate is 3%, so that you get a negative 1% rate. So um, so gold rallies when real rates fall. So that's important to note. Sorry, y'all, got to get something to drink. Healthy drink right here. No, they're not sponsoring me. Hopefully, they will in the future. So yeah, so that's one reason why I think gold is going higher. So now I want to pivot over here to um, what Nomi Prince has to say. Nomi Prince says that gold continues to gain ground on market expectations of a new Federal Reserve U.S. interest rate cut cycle, with prices cruising higher due to related inflows into bullion-backed ETFs. For Prince sites readers following closely, you'll know that our analysis and forecast at the start of the year outlined why we expected $4,000 gold levels by 2026 and are now raising our forecast to $4,500. So right now, gold's trading at $3,700. Nomi Prince had a $4,000 price target and is now raised that to $4,500 by 2026. So we also have Goldman Sachs. Goldman Sachs has a $4,000 target on gold, $4,000 an ounce. So when we look at just the shift and the change in the sentiment on Wall Street, we can see that gold is definitely going to go higher. I think it's going to go higher. Obviously, deficits and debt is going to continue to increase. Central banks are still, struggling with trust in the U.S. government, so they are buying gold instead of U.S. Treasuries. You have multiple factors with these huge hedge funds saying to allocate a percentage of your portfolio to gold and such. We just saw the information there. And so I think that gold's going to go higher. It's real money, and it's going to protect your money against inflation and protect your purchasing power. So that is the main reason and the main case why I'm still bullish gold. I'm still buying at these prices. So even though I was buying back at $1,800, $2,000, $1,600, I've been through multiple ups and downs with gold over the last 5 years, but I'm still buying today because I think that the gold price could significantly go higher. I'm also buying silver too, but this video isn't necessarily about silver. I think silver could hit triple digits at some point in the future. And I think silver's inflation adjusted price, it should be over $200 an ounce if you're factoring in when it hit 50 in the 1980s. And now it's at $43 or $42 and some change. So that's my take today. I hope that you all are doing well. I encourage you all to consider this information. None of this is financial advice. However, gold is real money. It is money in the Constitution. And we have a government that is continuously printing dollars, continuously eroding your purchasing power to where it makes it hard to live and make ends meet. And so gold is a way to protect yourself against that. And I'm talking about physical gold. You can also own gold stocks. I own gold stocks and I'm up significantly on many of my gold stock positions. One of them I was up about 120%, 130%, where from when I was buying the stock. So, there's definitely ways that you can protect your purchasing power and to use the leverage of gold stocks or whatnot. But you have to do your due diligence on that and understand what you are investing in. As we can see, many people are investing in the gold backed ETFs and such, just as a way to get exposure to gold. And you can obviously buy physical as well. So that's my spiel for today. I want to share that with you all. I hope that you all are doing good. I hope that you all are blessed by the best. And we'll definitely be back to talk more commodities, investments, and how we can position ourselves to prosper, but we have to think and we have to act. Like I've been talking about gold for the last 5 years. Some of you have been watching this show where I've been talking about gold for a while, but it's important to understand that. So thank you all for watching. And I see that I'm frozen for some reason, but yeah, hopefully you all still hear the episode. All right, thanks JT, and you all take care.